I'm going to get started because this is only a 30-minute conversation. Thank you all for attending the Four Metrics Heartbeat. I'm Jonathon Fishman. I am both a founder and I am the Chief Executive Officer of LeanLaw. And our mission and our goal is always to help law firms be better businesses. So today we're going to talk about the revenue operations. LeanLaw, as I said, helps law firms be better businesses. We help modernize all of the revenue operations. So many people think about timekeeping and billing, but really when they're acquiring new timekeeping and billing software in this day and age, you're really thinking about revenue operations. How do we onboard our clients? How do we manage the workflow? How do we bill? How do we collect? And what are the most important KPIs? And I think it's important, LeanLaw is centered down on that mission to four metrics, which I'll speak to, that I think are the most important that law firms should be thinking about. And then, but a little note about how connected workflows are so important. I'll show you a little bit of AI and I can speak to LeanLaw's AI strategy. But the one thing we've noticed, especially in the deal flow that we've seen, is two trends that are really driving the idea of law firm performance. And one major trend is the migration of boomers leaving law firms and younger folks taking over, and a more keen sense to understanding profitability and effectiveness and efficiency. So that trend has been going on for a while, and we're seeing younger audiences who are thirsting and demanding better data, better tooling. And then number two is AI as a disruptor, in that it is forcing law firms to think about profitability, efficiency, to ensure they're being competitive. So while there's an influx and a challenge to manage AI tools as to your lawyering side, document management or document intelligence, and certainly there'll be some AI activities around revenue operations, it is, and I think in a healthy way, forcing businesses to not think about cash flow, which is what lawyers tend to think about, how much I bill and how much I collect, but actually think about efficiency and profitability. And it's our hope to. If you walk away with one thing today of what you want to learn, is that LeanLaw is a platform to help you run the business of your law. I'm not going to spend a ton of time showing how to create an invoice or how to track time, of things of that nature. This is about the metrics and about how LeanLaw gives you insights around revenue operations. If you want to learn more about how to operate the product or how it tracks time or some of these really fun and important things, just raise your hand. We're happy to either send you information, do a demo, whatever it might be. If you're a current client, you want to learn about a feature, just raise your hand. We're happy to help. So the four metrics, and again, that chat window is there. You guys are on my left screen. If anyone has any questions, the four metrics: utilization, realization, collection rate, and days to collect. Now, there are tons of different data points in a law firm, from WIP, billed, collected, compensation, productivity. But if these four data points are not working, everything else to a certain degree doesn't matter. And utilization, and in particular for hourly billers, but also certainly plays into flat rate or even potentially contingent-based practices, is ensuring that we're getting the time into the system, and a large portion of that would be billable for those hourly folks. Realization, this is the thing that bugs me when I see firms struggling with this. This is ensuring that what you put into the system actually gets into billed. Doesn't mean it's collected, but it's billed. And this is where, when I say frustrating, this is the work the lawyers have already done. It's in the system, and it just doesn't get out the door, or gets written down for whatever reason. And this is just this is a death of a thousand cuts. Collection rate, what percentage of that work's getting collected? So these two things are like, hey, we did the work, we sent the client the bill, and they didn't pay us, or and why? And this is tracking these two numbers are really critical, because lawyers make so much cash, they don't realize what the delta is or what the opportunity is of just moving a few points around realization and collection, in one way or the other. And then the last, days to collect. And a lot of folks say, well, we don't have a cash flow problem. Well, maybe we have some deal flow in our funnel right now where folks are going to lines of credit to cover because they're struggling getting their bills out and they're struggling with collections. And the idea of time to money is something that I think that law firms are at times act like banks to their clients. Like we'll just hold a payment, and there's certain reasons to do that. And I'm not saying every bill should be paid in 10 to 14 days. But the idea of doing the work, waiting 30 days to bill the work, and then waiting another 30 days to collect means that the work was performed and 60 to 90 days later, you're getting paid. And for small businesses, that can be very challenging from that. And there's easy tools to change that. So these are the four metrics that we think are really critical. Now, I want to just start with a firm, and I'm going to go to the product in a second. We promised no slides, but I broke my promise because I didn't write the marketing speak. This is a firm in LeanLaw land. We were working with them to help them identify two rates, and we came on two numbers that were unhealthy, collection rate and average days to collect. Healthy LeanLaw clients are collecting really at about a 95% clip, 90, 93 on average, but the top performing ones are 95 to 97. Average days to collect is roughly 20 days. And again, our better performing firms are doing 7 to 14 days on days to collect. And having a sub 1% bad debt is awesome. So what does this mean, right? So we look across the whole firm. When we dig a little deeper on this firm, we can actually see that we have attorney 4 and 5 are doing really pretty well. Their collection rates are plus 90%. And the three challenge ones, and one of those folks is the largest biller, are up on top. So this data, I'm going to show you where it's live in the product. This allows us to look at the firm, but when we dig deeper, now we can ask directional questions. Why is attorney 4 and attorney 5 at a higher clip? Is it because of how they engage their clients? Is it how they call their clients and remind them of the bills? Is it how they set expectations around how they get paid? Meaning maybe they accept credit cards. We don't. It's all up to you and as law firm operators and owners to say what the why is. And we also might look at attorney 1 and say, a big portion of their business is one case or one matter, and you can speak it away. But what happens is too often times firms are speaking it away. What I mean by that is when you say, why is it 82%? Oh, we had this one case, or we have this one matter. Cool. But what happens is that becomes a trend, and your collection rate now is an issue because it's not just one case, it's a trend over time that we need to address it because $229,000 is not immaterial. So I'm going to look at the math, and I want to show you what this means because it all comes down to math. So let me get out of this real quick and show this calculator. This is just a calculator. And again, we're not trying to present audit-ready data that Ernst & Young is going to audit you on. What we're trying to do is give you directional insights into the business. But so that's that same firm, at 2.5 million, it's about $400,000. If we can move that overall collection rate from 70% to 85%, that's $385,000 of captured revenue. Now, LeanLaw is less than $75 a month on a pro subscription. So if LeanLaw can help you capture $385,000, that is an incredible investment. And time to money, moving that from 30 to 15 days, the current 37 days to 15, that's $130,000 of cash working that's available to you. So these numbers are real. They're real numbers that have real money. And this is the trick. When you talk about it in generalities, attorneys will wash it away. I've seen this. I've talked to managing partners that are on seven-figure practices, and they'll wash it away and say, "I don't have a problem." But when you really dig in and get into the niche and say, "Well, why is your collection rate 79%?" And you say that candidly amongst other partners. I had a recent conversation like that. It gets real. And when you can quantify it and start saying, well, what if we move that from 79 to just 85%? Like, what would that mean? Can I put $20,000 of cash in your pocket? And there are things that we can do that are very straightforward and very manageable to move those numbers. So LeanLaw's job in helping you be a better business is to modernize all these workflows, but to help you gain these insights. So let's look at LeanLaw. Any questions from the group before I get on? I don't see any, but if you want to ask a question, please do. Okay. Let's look at the product here. Can everyone still see my screen? I just want to check in. Yes, no, are people there? Okay. That's good. Thank you, Kendrick. Thank you, Stephanie. I appreciate it. It's hard to sometimes do this when we're not seeing each other and whatnot. Okay, think of yourself as a as a responsible attorney, and you have a client called Coastal. And again, I'm not showing you, this is LeanLaw. I'm not showing you how to track time. I'm not showing you how to deliver invoices. We're talking about revenue operations and we're talking about data and data insights. So you're a client, you have a client called Coastal. I'm in the clients section of LeanLaw and I check in on Coastal and I can see right off the bat that this client has 6 different matters. There are some flat rate matters. They're hourly. LeanLaw supports contingent, hourly, and flat rate matter. So regardless of how you operate, LeanLaw supports it. I can see all of the stakeholders that contributed to that time, and I can see that the client has $117,000 of work in progress across these different matters. And if I click into a specific matter, I can see that data specific to that matter. I also see in real time, and this is updated in real time against QuickBooks Online, our back office accounting architecture. The client has a $1,700 balance. The client has $22,000 sitting in trust, and we can see the last payment. If I jump over and say, well, when was that $1,700? When was that invoice dated? I see it right here. So LeanLaw is just working to put data right in front of that responsible attorney so they get a handle on what is the financial status of a matter. Because they might say, hey, that's a lot of WIP. What decisions do I need to make on that client? Or maybe I want to dig deeper and look at productivity reports or summary reports. Now, think of yourself as, I'm going to a second tab called reports, and I'll show it in a minute, but this is the WIP billed collected by client report. So we're looking at what is work in progress, what is in drafts, what has been billed, and what has been collected. And I'm thinking about that, Coastal, because now I'm a firm operator and I want to know, well, we've got $30,000 in WIP services based this year. I could expand this to different time periods and see that whole 117,000. But there's that 1782. If I click in, I'm seeing it. The 1782 is associated with Frederick there as well, and there's some other collected data. So everything that we do is collected, but this is now in a different context, looking at the financial status of that matter from a different user. Any report can be exported to Excel in a single click, and reports are all sortable. So if I want to know, hey, which client has the most invoices in draft, because I want to think about velocity, how do we get things out the door so that we can get it collected? I can identify that. Now, the third tab, you're thinking of, maybe now I'm looking at my receivables report. So maybe I'm that same responsible attorney, or maybe I'm a firm operator. And I'm looking at just a basic receivables report. And I come into Coastal and I can see exactly where that 1782 is. It's current. If I click in, I'll get the invoice and can do different actions on that as well. So a different lens and trying to stay connected to that $1,700. Last, I've moved over to the billing tab. So now you're a billing clerk. Your job is to deliver the invoice. Your job is to make sure that you have transparency. This client preferred it to be emailed. I can see that this has been delivered. Now there's different states of this. It could be delivered, it could be clicked, it could be bounced. If I needed to send a reminder because this client needs a reminder, it doesn't, it's current, I could easily do that. So this is just instrumentation to help that billing clerk push the email out. And it all tracks back depending on your role and what purpose that you have or what function you have in the law firm. Any questions? Oh, last thing I want to show. This is what the invoice looks like. This is that same invoice. And of course, it would have your law logo. It would have your any templated or custom email that you would want. But we're clearly articulating, here's your payment's due by 5/20. And this is what's really most important. Firms that use a fully electronic billing pathway always have better metrics in terms of collections and in terms of time to money. Why? Because there's a pay now button. Now, it doesn't mean that you need to take on the fees. LeanLaw supports a fully surcharged environment if your state permits it. But even at 3%, if you go back to that calculator, even if I take the load of 3% and get paid faster and have a higher collection rate, that will pay itself in dividends in terms of not only your collection rate, but your time to money. But this has your fully paid. And this, when paid, will update all of the accounting and bookkeeping associated with that. So that's the idea, that we want to give our clients the ability to pay immediately, whether it's via debit, credit, or ACH. Okay. Any comments, questions from the team, from the group here? All right, let's now look at the firm and look at dashboarding. So every firm, and I've learned this, I've done almost 4,000 to 5,000 meetings with small to mid-sized law firms. And what I've learned is that even though they all carry a similar operating model, hourly, flat rate, fixed fee kind of work, or contingent, they all have different data that they want to track and collect, and they all have different ways that they want their invoices to look. And that's just the nature of the practice. But here are these 4 numbers. This is our new dashboarding in LeanLaw. And this is the financial performance. And right off the top, you can see our realization rate. Now, I have a demo count. This data is bad because it's not complete, because I have one user using it. But you can look at any type of period. And if I pull it back and let's look at years of data, I can update those filters, and you can see in real time what these realization, collections, and average days to collect, and look at different trends. These numbers are front and center. They are permission based, so you make sure the right people see the right data, but they're front and center. They're available every day. So you can track these numbers, you can set goals against them. When we look at some of the customizations that clients want. So for example, some clients might want some type of budget tracker. So not only do we have standard dashboards around both utilization, realization, collections, and time to month, we also have the ability to create custom reports, including custom data points, such as budget. What is a budget? It's a custom data point, or location, or referral. So this client, this is something that they wanted. They have a normal process, or intellectual property firm, or something of that nature, maybe not an IP firm, and they want to track on a particular matter what's in will, what's been billed, what's been total, and what percentage relative to the budget are we, so they can track, hey, we're 94% or we're over budget. This is just a budget tracking tool. And what's material here is not a budget is useful. It's that we use these things called custom fields. I thought I had it queued up. We used custom data points to say what the budget month, and we were able to create a custom report. You might see a different one around a monthly time review. Some firms' hourly time and realization is really important. So we can set certain benchmarks that we expect our team to put in, and then track them month over month and do simple math. How many hours, total hours, what were the billable hours, what was the difference? And use those to ensure that we're tracking an overall utilization that is good for the firm. So we drive it through the 3 core metrics, and then we can customize it for your specific needs based on custom data forms. Now, when we're talking about how do we impact and look at collection, well, we can come down and look at our collections tab. And if you remember those attorneys, this gives us the aggregate, whatever period that we want, to look at the collection rate, the days to collect, and the bad debt. But more importantly, I'm going to expand this to get a little bit broader data set. We can now look at it from, let's let this fill up. We can look at it, all of the responsible attorneys. Everything is sortable, so I can sort by different columns and collections. And this is where we can begin to identify and have meaningful and pertinent conversations with stakeholders to say, for Sterling Cook, how do we get his collection rate up to what's on track for the rest of the firm? Or maybe we don't, but we have directional data to understand that. How do we get $140,000 out of our 90 plus day AR? And we can dig into this deeper or keep it high level, whatever, in saying looking at open invoices. Maybe we want to look at specific invoices which are aging by either practice area or matter name or some other data point that is meaningful. So you can quickly identify what's most outstanding and act on it. The last thing I'll show here is the payment composition. And I think this is overlooked in many law firms, which is time to money. And I think about two ways. How do we make it easy for our clients to pay us? And how do we ensure we're using the instruments that most effectively get paid? Now, this data is crappy, but I can tell you, having looked at many of our clients' data with their permission, of course, that checks historically are the slowest to collect. And people have this folklore with checks. I don't really understand it, but they're like, my clients want checks. And I can tell you wholeheartedly, when we talk to law firms' clients, they don't want to pay by check. And they're happy to pay via ACH or credit card or some other instrument. But you can start to see that Confido, our payments partner, in this instance, it's 42 days as compared to some of these others. So by tagging and understanding how you're getting paid, that correlates into time to money. And as I showed you earlier, time to money has real world impacts, not only on how fast you get paid, but not having making sure that you actually are collecting. I'll pause for a second, take a breath. Any questions from the group? Oh, hey, Susan. Susan asked, I have an unknown on mine. Unknown means that I have it too. What that means it's unknown is that when we go in and put a payment, we didn't identify it, or when a payment was entered in QuickBooks, we didn't identify it or couldn't identify it, so it's unknown. And we want to track those down. There's a bit of manual work in compliance. If someone clicks on something through this link that I showed earlier, this Pay Now link, we will know and tag that from Confido. If someone is in here in Manage Invoices and says collect payment, if I just say collect payment, there is some basic compliance that says, well, where did we get it? And if they don't and use that blank, that can become an unknown. Any other questions from the group? Thank you, Susan, for your question. Okay, so I've talked a lot about reports at the aggregate I talked a lot about in our new what we call insights or overview tab. That does not displace the importance of our old reports or our classic reporting architecture. I shouldn't call that, or standard reporting. So standard reports are still important, but this was the evolution that these, while are utilitarian, don't really hone in on some of the core KPIs, but they're still very critical. So it's not to ignore that LeanLaw by client or matter or by user have some very important reports around law firm efficiency and long firm productivity, such as our user productivity report. So I'm looking at this year, and this shows all of the billed hours worked, any write down. Now, of course, everything is clickable. Let me just make this a little bit wider and say all time. And I can see, I've got this one user that has 10 hours of write down. That may or may not be material, but we want to be tracking write down because that is a direct impact of our realization. If we have a realization target, then we need to know where we're writing down, because this is one of the number one culprits of realization being lower than it should be, which is write down. When we're taking hours and saying, hey, we can't bill the client that, so I'm going to make a $0 entry. And we're tracking write down by a percentage and by a dollar amount. Here you can see across $4,100. So these reports, whether they're our productivity report, our WIP bill collected, our compensation reports, we're not suggesting they aren't important. but they're telling a more detailed story that I think sometimes gets in the weeds and misses the macro or more important points of the firm. Um, Last two things I want to mention is that LeanLaw recently released a new instrument, a new tooling around flat rate work. We call this our fixed fee panel. So if you are a firm that does flat rate work, this allows you to see all of the flat rate items or fixed fee items in one place. I can sort them by client matter. I have advanced filters to say, well, show me all types that are completion based. Fixed fees can be either time based, they can be reoccurring, or they can be completion. So these are all completion based. And maybe I want to look at certain statuses, which ones are not complete and why. We're also allowing you to look at profitability. Let me get off of this one so I can get something. We can see this client, this Novatech, it's a $5,000 application fee. What we're doing is making sure we build 5,000, we've built $8,000 in cost. Why? Because we have time entries totaling dollar value greater than that. So maybe something needs to be converted to a billable item. So it's in addition to the flat rate work. Or maybe it's assigned to the wrong fee. So we not only track at the client matter with flat rate work, but we can track at the fee to get to the profitability of that. So that is just a greater level of nuance that you can see on the flat rate matter. And then, of course, we've also recently released a new product called Settle Flow, which adds an entire settlement process to any contingent matter. So you can track liens and expenses and go through a very regimented process of settling those funds. And in phase two of this product later this year, dispersing it. And both of those, both our flat fixed fee work and our contingent product called Settle Flow, have their own analytics to track the revenue operations, the profitability, and whatnot. And I don't have great data here. Let's just see if I can go to all data. Let's go previous 30 days. I should have something in here. Um, well, that's not a very good report because I don't have good data. But again, tracking settlements and recovery fees and total amounts and statuses, I get nulls because I don't have data in my thing. We also have a similar tool and tooling for tracking flat rate work, looking at profitability, percentage of the fees that have time associated, days to collect, looking at velocity. How long is it taking to get certain things through the system? Remember, LeanLaw wants to help you get your work through the engine so it can get to a build state. And then, of course, we can look at profitability, which percentage are meeting the profitability threshold. So these are different instrumentation helping you understand how to not only get your fees through the system, but ensure that they're profitable. I'm going to stop my share. Whoops. I'm going to stop my share. And as we're nearing the end of time, say that I appreciate all of you for taking the time to meet with us today. And I hope that your firm, if you walk away with one thing, that you're thinking about your firm in the context of those four metrics: the utilization, the realization, the collections, and the time to money. And if you look at those numbers and know those numbers, and have those numbers can drive the overall profitability, the overall financial health, and take a lot of downstream agita away, and make your lawyers' lives happier, make your firm more profitable, and ultimately allow those attorneys to do even more great work. So if you have any questions, and as I said, if there's more tooling or workflow information you want to see, please let us know. We're more than happy to have that. So if there's no final questions, and feel free to ask them. I'll linger for a minute or two. We're going to end the session today. So thank you all for attending. Much appreciated.